Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the U.S. Our simple, proven system will help you create real wealth and passive monthly cash flow. Get your free copy of the ultimate guide to passive real estate investing at noradarealestate.com/guide. That's NORADA realestate.com/guide.
Hey, Todd Dexheimer with another episode of Hump Day Hustle. And today we're going to talk a little bit about seller financing and can we actually do it in real estate, and can we do it in business? And a lot of people, at least I've been hearing lately, is it can't be done. And I think it happens in really hot markets and really cold markets, as people think, well, you can't do something like that. And creativity is probably maybe not the number one, but an extremely important part of business and business success. If you can come into a business with very little of your own money and make it successful, you're going to be a lot better off doing it. So most of us come into business and they start without any money. I started with about $20,000, maybe had a little bit more, but that was my whole life savings. My wife and I, we probably had 30,000. We used 20 of it to get started. And the point is, when you can actually be creative and do things successfully, you're going to get a lot farther ahead. So can we get other people to invest in us? So I guess more than just seller financing, this will be talking about, can we get others to invest in us? Can we get others to trust us and to be able to use their money to push us to the next level? And how do we do that? And I'm not going to spend a lot of time in private investors. That'll be a whole nother podcast, but I'm going to focus a lot on getting a business owner or getting apartment owner to help you out. So this came from a recent blog site that I go to. It's called Bigger Pockets. And a guy was on there, pretty arrogant guy, bragging about how awesome he is in real estate. And I thought it was kind of funny because he's only done 3 deals. So he's actually, I would say, more of a beginner. But so he's done 3 deals, and he posted, what's stopping you from investing in multifamily? And then he said, what he's done. I've done 3 apartment deals. I managed a couple other people's properties, blah, blah, blah. And he said, basically, the best way to get into real estate is if you invest your money passively with someone else, which I think that's very powerful, but maybe not the best way to get into real estate. Then he asked, if anybody has questions. So he went on, as people continue to ask questions, to basically slam them and suggest that they should invest passively in real estate to get started. And I think the main point that he was trying to get at was, hey, invest with me. I can teach you the way. And so every response was pretty arrogant. But it leads me to one of his responses that kind of irked me a little bit. A lot of them did, but hey, somebody mentioned, hey, I've got no money. I want to get started in real estate. What can I do to get started? And he slammed him, said, you've got no money. You've got no deals. You can't get started, get your act together. And I went, you have no clue. You can get started in real estate with very little money. You can get started in business with very little money. I was talking the other day to a gentleman who is starting a an app on his phone, on anybody's phone, where you can go, you've got a car trouble, and you can take your phone, you grab your phone, and you can look up who the dealers are in the area that, or who the mechanics are in the area that are going to repair your vehicle. And let's just say you've got spark plugs out. Okay, so you can tell the mechanics that that's what's going on with your vehicle, the type of vehicle that it is. It'll send everything to them, and you'll get messages back. I don't think it was messages. Up on your screen will pop up pricing for, let's say, a half a dozen mechanics that are in your area. And that was the new business he was starting. Now, him and his business partners put about $30,000, I think it was, into their business. So they started, him and his business partner started out with $30,000. From there, now they are raising a fund to get this thing to explode, to be able to get his business off the ground. And that's kind of what we're talking about today. And in real estate and in business, let's say you're going to buy an established business. Let's say you're going to buy that auto mechanic, right? But you don't have the money to get started, but you have the knowledge, you know how to operate a business, you know how to take it from the level it's at to the next level above. Maybe an auto mechanic that's old and retired, that hasn't, or retiree, that really just hasn't kept up his shop because he's known for years that he's done, he's gonna retire. So then, well, what do? You approach that auto mechanic and make a deal on his building and on his business with him financing you or a portion of you, and get the bank to finance part of the rest, and possibly some private funds. So we can throw it all together. We can just do one. We can do what we want. So me specifically, my brain thinks real estate because that's what I do. So I will talk about some ways to do it in real estate, but the same can be applied in really any business. So seller financing in real estate, how do we do it? And can it be done? It can be done. Is it difficult? Yes. Does it take the right setup? Does it take the right motivation for the seller? Does it take the right seller? Absolutely. But if that's the only way for you to get into the deal, then you need to be hustling and get into the deal that way. Whether it's a business, whether it's real estate, whether it's really anything, you need to figure out how can you get in that business. So with that being said, just about a year ago, I had a 22 unit apartment building that I was trying to buy in Cincinnati. And the seller rejected my offer, which was just to cash him out. I was going to get bank financing. It was distressed property. I was buying it for, I can't remember, right around $450,000, and needed to put some work into it to get it back up and running and stabilized. 11 of the units were vacant. So he rejected my offer, and I thought, well, okay, I can't pay him any more for the property, but maybe I can convince him to finance it for me, and he will like that because I'm paying him an interest. This guy was retiring, or retired already from his main job, and now he's just selling his properties. So what I did then is I sent him another offer, same price. Actually, I think it was a little bit smaller, a little bit less, but I sent along with that a sheet showing that what he would get paid, a spreadsheet showing his interest and how much he would actually make. So if I bought it for $450,000, he would actually in 5 years make an additional $100,000 by being the bank. And that's what I sent him. And lo and behold, he liked that idea and he accepted my offer. And then we went from there. So he financed the deal for me. I got it for 10% down, which normally a bank would require about 20 to 25% down. This was distressed, so maybe even up to 30% down. And I'm out of state, so maybe even up to 30% down. I got it for 10% down. And then with the other 10% payment, it would have been pretty easy to raise private capital, which I did. Or, if you wanted to use your own money, you could do that as well. The next deal I did, the very next deal I did the exact same thing. This time, instead of just making one offer, I made two offers. I made one cashing the guy out, and I made a second one with him financing me. And I did the same thing. I sent a spreadsheet showing how much he would make. And this guy did the same thing. He accepted the seller financing terms. He wanted that. That one was 5% down. So that one, I brought the money to the table and the 5% and bought that deal. Now, I've continued now ever since putting two offers, maybe even 3 or 4 offers. There you can do a lot of things. You can do the seller just carries the whole note and they finance the whole deal for maybe 5 years, 10 years, 7 years, whatever you get. The second deal I did was a renovation. We only did 1 year term, and then I have to get bank financing, which worked well for me for what I needed. So so that's one way. Just the seller straight finances it. Whatever terms you can work out, I would suggest trying to work out bank type lending terms, and then seeing if they like that or not. If they don't, you can always negotiate from there. Now, the other way is a seller carryback. So again, we could do this with the business. We could do this in real estate. I know real estate. So we're going to be buying a property, let's say for $1 million, and we're going to ask the seller to carry 10% of that back. So $100,000 they're going to carry a note for. And we're going to do a 25-year amortization. We're going to do a 5-year balloon, and we're going to do it at, let's say, 5% interest. So now we got to come up with the other 90%, because they're only financing 10% in this case. So I got to come up with the other 90%. So then I go out and reach out to a bank and get the bank to finance 80% or 75%, whatever that bank will do. And then I have to come up with the additional 15 or 10, whatever the bank ends up with. So again, a lot less money out of my pocket. Now, if that's too much money out of your pocket, you can combine that with some private money. You can raise that money. You can get a line of credit on your own house. You can get a line of credit with really anybody else. You may know a close friend that has a lot of equity in their house. You can say, hey, take out a line of credit on your house. I'll secure a note against this business or against my piece of real estate, and you can get paid whatever, 6%, 8%. You can get some equity in the deal. You can get 50% of the equity in the deal, 60% of the equity in the deal. Whatever you got to do to make the deal get done. Is, in my opinion, 30%, 20% of a deal is better than 0%. And let's get the deals done and continue moving forward. And if you actually continue moving forward and get a deal done that works for both parties, what's it going to do? It's going to increase your business. It's going to increase the trust level. It's going to increase your experience. So in Think and Grow Rich by Napoleon Hill, he talks about, getting in the corridor, getting in that arena that you're in, and not worrying about the money you're making, but worry about the education you're getting by getting into that arena. And that's, to me, a very important thing. So giving up a little to gain a lot is extremely valuable. Now, what are some other ways we can do? Well, we can have the seller become an equity partner in our venture, whether it's real estate or a business. We can have them become an equity partner. So you're buying the auto mechanics business, and you don't have the money. So you go get a bank loan because you can get a small business loan. But you still require a down payment. So now you have him become an equity investor. So let's say you pay $1 million again for this business, and you can get 80%, 80% of a loan. So now we need 20% more. So we need $200,000. Plus we probably need some other expenses, closing expenses, maybe a reserve account. So what do? We ask the seller to keep $200,000 or $300,000, whatever we're going to need, into that business or into that piece of real estate. And in exchange, that seller will get an equity position. So we have no money out of our pocket in this case, or maybe we do put some money into it, but we have very little money. And so we give that equity investor, the seller, we give them, let's say 60% of our profits. And we also give them maybe a preferred return, some other, some collateral against the property. And eventually we have a payout clause or a buyout clause. So they're out of it. But we can do that as well. And that might attract other people too. And that might be attractive to you going, you know what, they're selling it to me. They're taking an equity position. They believe in this business still, obviously. So my risk is mitigated. And maybe, just maybe, they will help you out when you need problems because they do have a risk involved in it. If you don't make money, they don't make money. So there's another potential avenue to go. Of course, you can combine all of these together to get a deal done. And just really being creative. That's the really important thing to me, is be creative to get deals done. And I'll talk briefly about private money, and that is where you can get a loan on this property, let's say 75%, and you're going to need to raise the rest, the next 25%, plus your closing costs, plus some reserves, all that kind of stuff. So on $1 million property, if you got to bring 25% of it to the table, you come up with $250,000. You come up with your closing expenses, maybe another $50,000, and then you come up with your reserve, maybe $75,000. So all in all, you're going to raise the money that you need, the 425. Was that right? No, 325. What did I say? 250 plus 50, so 375. Sorry. Math is a little bit slow when I'm trying to talk and go really fast. So anyways, you come up with that 375 and you raise that through private money, and you give them an equity stake in your business, or you give them a high interest, a 10% type of interest, or maybe even higher, maybe just a little bit less, depending on what you can negotiate and what your experience is as well. So anyways, that's the main gist of what I'm going to talk about. There's a ton of ways to do this, but the most important thing to know and to remember is that you can be creative to get deals done. Don't just sit back and think, just because I have no money, I can't invest, or I can't buy a business and build a business. I got to come up with some get rich quick thing because that's what I need to get going. If only. But that's not the case. If you want to be successful in business, you will figure out how to get the deals done, and you will figure out how to be creative. Being creative can be a powerful tool to get you into the corridor and to get you into being profitable and reputable in the business that you're going to be in. So I appreciate you joining me for Hump Day Hustle. I'm Todd Dexheimer. I hope you enjoyed the episode. I hope you learned something. I'm going to challenge you to be creative and to do something creative this week, whether it's being creative on a deal you're going to be doing, or being creative in setting up your business, or being creative in how you network with somebody. But I'm going to challenge you to be creative and make it a point of doing something creative to expand your business, expand your mind. Don't forget to like us on Facebook, and please subscribe. We'd love to have your reviews, positive, hopefully. All 5 stars we would love. And again, subscribe. It only helps us build our channel, reach more people, and spread the message. So I'm signing off. Remember, every day is a Saturday. Enjoy. Want to learn more about real estate investing? Tune in to the best real estate investing advice ever with Joe Fairless. Joe has the longest daily running podcast on iTunes, well over 1,000 episodes. You can listen to me on Joe's podcast, episode 1015, where Joe interviews me and asks me about my best real estate investing advice. Joe has interviewed fantastic guests such as Emmett Smith, Robert Kiyosaki, Barbara Corcoran, all kinds of fantastic guests. Make sure that you go on to Joe's podcast, subscribe, give him a 5-star rating and review. You do not want to miss out on a fantastic podcast, the best real estate investing advice ever with Joe Fairless.